Hello traders. Today I'd like to kind of dwell further into the world of technical analysis. To start with, I'd like to focus on a single tool, and that is Trendlines. So I think they're awesome. They're really useful. There's a wealth of information you can gather from them. Not simply the trend. Is the trend going up? Is the trend going down? Is the trend going sideways? There's a lot more you can get out of them. I think they're kind of misunderstood and kind of underutilized. I think, especially if you're a trader that's kind of a trend following system that you're using. If you're using that kind of system, then Trendlines are definitely an awesome tool. So, that being said, what is a trend line? Well, a trend line is simply a line drawn over pivot highs or under pivot lows to show the prevailing direction of price. Let's see, I'll say that a little easier. Basically, it's just in an uptrend, you draw it from the lows to the lows. In the downtrend, from the highs to the highs. So this is an example of just a simple uptrend. So, green, how about that? We'll go from low to low, and in the downtrend, we'll go from high, that one's kind of awkward, to high. And if in the article that I wrote that kind of goes along with this lesson, I said that there's kind of two general methods for using trend lines. One of them is a trend following kind of tool. So if you're looking for a trend following, you would take this trend line as a base support, and then right there you look for market to bounce within, like, say this this time area right there. And then if it does, if it bounces and doesn't kind of go through the trend line, then that's a buy signal, because it's a signal that it would continue in that direction and upward. And the same thing for over here. In the downtrend, if it finds support on the trend line, you're looking for a sell signal right there. Let's take the other example now. Like the other general method for trend lines. Let's say instead they're looking for a reversal. So this is when you're looking for it to penetrate the trend line and to stay, maybe a few candlesticks or a few bars outside of the trend line. There's kind of a few different school thoughts on this method and where to enter. The first one is, like, as soon as it breaks a trend line, go ahead and sell, because this is a buy, right? Because you're looking for a reversal, so you're looking for penetration, and then that's an indication of a sell signal. The reason for doing it right there is because you can have a closed stop. Like, a lot of people would draw a channel right here, that's a channel, obviously. This is the downside of the channel, the upside of the channel by the green. And so you'd place your stop at the green trend line once it penetrated your base support and uptrend. And the closer you are to the red, the closer you are going to be your stop, so you have a higher risk to reward ratio. So it's better money management practice. On the flip side of this, other traders think that it's wiser to wait and see this moment where you have it hit the trend line again, and the trend line now becomes a base of resistance in the downtrend. So it bounces off of it. I'd say, like, it depends, personally, for me. Say that this penetrates the trend line at, like, a pivot point or a daily high, or a significant psychological level like a 1.40000, something that people like zeros or 20s or 40s, solid numbers where people respond to that. So then you have an overlay which is important. You know, like I referred to the analogy of the hunting analogy in the written part of this video, where you don't want to go just wandering off in the woods with just one clue. You need a couple different tools on your side. So yeah, if it breaks here at like a pivot point or, like I said, daily high, then go for it. You know, it's a much higher percentage chance. But if not, then this method's probably a little safer and more effective. So down here, we just have kind of a real world example of, you know, actual price data. But it's the same thing, you know. Pivot low to pivot low in an uptrend, pivot high to pivot high in a downtrend. When you have a ranging market, it's kind of better to think of it as like a base of support and a base of resistance. I always draw them in channels. I never just do one or the other, because I'm either looking right here, if this kind of pattern happens where it's ranging, I'm either looking for it to break out or reverse. So I'm either looking for it to break out or reverse. And so if I'm looking for it to break out, I'm going to buy at the bottom. If I'm looking for it to reverse, I'm going to sell at the top. Over here we have the same thing, you know. Pivot low to pivot low in an uptrend. Pivot high to pivot high in a downtrend. So that's kind of like the general two methods on how to use them. And now the other thing the other piece of information a lot of traders miss when they're using trend lines is directional movement. Now, directional movement is simply the direction that the trend's moving. And kind of to dwell further and to do a better analysis is the angle at which is the true direction. Is it going at a 1 o'clock angle, a 2 o'clock angle, a 3 o'clock angle, a 4 o'clock angle, or a 5 o'clock angle? You know, this is like a 45-degree angle, 70. Obviously, that's flat. There's actually a tool where you can draw trend lines with angles. And what directional movement is, or what the angle of movement represents, really, is velocity. And velocity is simply a change, an object's displacement over a given time. Displacement basically means how far has it gone. And so when you're referring to price's velocity would simply be its speed, which its speed would be how much has it moved with, oops, I was meant to do this, sorry, 1 second. So its speed is simply how many pips has it moved. So this is the first part of the equation right there. Change in x, which x equals price movement, over, so this is in is also kind of a word for divide, right? So over time, the change in time. So the change in time is 2 hours, which is represented right here and right here. So that's the speed. Velocity equals change in time over change in y, or change in x over change in y. So basically change in price over change in time. So if it's moved, the change in price is 50 pips and the change in time is 2 hours. So that gives us a rate, an average rate or speed of 20 pips an hour. That's speed, right? Now velocity takes it one step further in what direction. So to show true velocity, we have to give it a direction. So it'd be 20 pips an hour at a 45-degree angle. So if this was the equation and then it was moving at a 2 o'clock direction, you could say it was moving 20 pips, nice, green, sweet, an hour at 45 degrees. Now, why is this useful? Well, often, if you're tracking the dynamic movement of a trend line, a lot of traders talk about how, especially experienced traders, how trend lines are dynamic in nature. A lot of them agree with this anyway. Not all of them, but they change. And you know, what does that mean though? To me, that just simply means that they're changing their angle. Like for instance right here, like we have this nice steep angle, right? And it kind of changed it right here, because here's the new low. Boom. So it's kind of getting shallow, and then not only did it get more shallow, but then it refused to it got rejected right here, right? Price got rejected at this kind of the same level, right? It's hard to draw a straight line on this, but right there, right? So this is what I'm getting at. Is if you're kind of aware of how velocity is changing, if you see a deceleration, right? A change in velocity is just acceleration to deceleration. So the market's accelerating rather fast right here, right? But then all of a sudden it's decelerating. This could be an indication that price is going to reverse because momentum isn't as strong. There isn't as much strength. That's showing a lot of strength up. But then you have all of a sudden a shift and it's not as strong. And then you combine this with like a double top. You could have, if I seen this and then I seen, these long shadows with these candles at the same price, I would sell right there. That's easily 30 pips, boom. You don't have to be completely right. And again, we don't know what's going to happen right here, but if you just kind of move this over, I know it's not straight, it's supposed to be straight, but it's kind of the way you have the picture in here. Sorry. But anyway, I might even sell again right there. Because again, even if this is an uptrend, we have another pivot low, right? Boom. The angle is getting shallower and shallower, which to me indicates kind of a degradation in the upward force. And you combine that with another triple top, you have a pretty good little sell signal right there. It's kind of the other way of using trend lines, is kind of a measure of velocity and how it changes. So, and that's kind of acceleration. That's just math. It's basically, just worry about if it's going at 1 o'clock and it's just a 2 o'clock angle, you should maybe think about maybe the trend's breaking and it might start reversing, right? And if if this is a pivot point, if you use pivot points, I used to use them. I don't use as much anymore, but if this is a pivot point, that's even stronger. So yeah, sell. So you have a change in directional movement on top of a double top on top of a pivot point. I'd probably, if I saw this and then saw it reject and then come back up here, I'd sell right there. Definitely. Especially because you got these tweezer tops. We'll talk about this in another episode, but this is definitely right there. These are called tweezer tops. These two right here, I don't know, I made the box a little too big, but these two are tweezer tops. Definitely an indication of a reversal. So I would have sold right there. There's too many things in your basket, A lot of, you got a high percentage chance. You would have made this at least. I would put my stop nice and close, like maybe right here, 15 pips maybe. 15 for 30 to 40. That's, a good 2-to-1 risk-reward ratio. That's good money management. So yeah, I think that's a good explanation on how to use them, and they represent, just not only you can use them to follow the trend and look for base support to enter, but also, as a reversal. Not only if they're breaking the trend line, but is the angle moving? So even if this one went higher and angle moved, I would still be looking for it to reverse, and so I'd be looking at different places, like daily highs, daily lows, like I said. And this happened to just be awesome because it was a double top too. And if you actually, there's something else that I missed earlier myself. So go black and look. It kind of see how it broke the trend and then found support or resistance within the trend line again, like I was saying up here. Bounces off, support becomes resistance. Same kind of thing happened. Look, boom, 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 boom. So you had resistance within the old trend line, and then you had degradation or deceleration in the market on top of a triple top. That's kind of, this also kind of goes into market geometry, but we'll talk. That's something I'm not going to go into. There's lots of articles and people that are way more knowledgeable about that. So This is my own kind of perception. So, anyway, so that given, I'll just go briefly on how to draw them in Metatrader. Now we have kind of a theory and how to use them, a practical example. Let's look at Metatrader real quick. New Zealand is looking good lately, so let's draw a trend line on the Kiwi. So, right here is your drawing tools. You also can go up here and go to Insert, Lines, Trend Line, and look, there's your trend line by angle. We won't go into that right now though. Keep the video kind of short or shorter. I don't want to go over time. Anyway, we'll just go to the basics. So, obviously, if this is an uptrend, I go from the base always, and I go from the base to the next pivot low, and I actually go all the way up here. And look, and there's your trend line. Now, here's a trick. If you want to project this at the same angle, you simply go to, so you right-click on the chart anywhere, go to your object list, and look, there's your trend line right there. Now, highlight it, click it, highlight it, click Edit. Now, if you just click on this ray button right there, watch. It's projected in the future. Boom, and look, the market's finding support right there. I might buy right here. I might have a buy. I actually really might buy. Let me look at something real quick though. Because right here, I'm going to use, I know this isn't trend lines, but I'm just going to look for something. Show you a sneak peek for a future video. See, price got rejected at kind of a 62% Fibonacci level for this uptrend. So it's kind of iffy because this is pretty strong downtrend. And this might be just kind of a retracement of it. Anyway, that's beside the point. Delete that. Here's another trick. If you highlight this, push Control, double click it, well look, you got an exact copy of the same thing. And now look, you have a channel. So what I shown you earlier, if you're looking to reverse right here, if you're just using a simple reverse method, right? Because actually, obviously we don't have a shift in directional movement. I'm not going to use it. I want to, but so if we were looking for a reverse, what we do is we'd wait for this bottom support right here, this trend line, to be broken, right? And then we'd put a stop right here at the blue one. Or maybe a little above it, you know, maybe I'd probably put it at 85, right here, this dash line, the grid line, put it right there. So 0.85810. Once it broke this, if I was looking for a reversal. I don't think there's enough to go on to really say this is a good trade. You can look down frame though. It was 5 minutes. So, you know, we don't have any, we got that hammer right there. And let's look at 15 again. So we got, you know, a hammer and a doji. So it's a reversal signal. But it's kind of really weak movement right now. So, and it's 11:22. So kind of the wrong time for a momentum shift. I think I'll wait until Asian opens, or at least till about 2 o'clock, 4 o'clock. So back to the trend line thing. I just thought I'd show you like how I would actually go if I was going to trade with this trend line, what I'd do. So, you know, as you saw, I went down and I looked for confirmation of candlesticks and that momentum was shifting back up. But the kind of things that don't make this a good trade is that we have this prevailing downtrend and then kind of a respect out of Fibonacci level. So kind of conflicting energies going on, and I tend to stay away from those. You know, like my mentor used to call them knots. He's like, if you're not a Boy Scout, stay away from them. So kind of respect that information. So I think I'll stay away from this. But you could, you know, if maybe you have other things going on your side, and this is a pivot point or some other significant level. Then I'd say, yeah, go ahead and buy. Or I'd say you have a pretty good chance of it continuing. But that's kind of how you draw it, right? So now the other thing is, if you're going to draw another one, you got to go back to your object list and you go back to edit, and you have to turn off the ray. Or when you draw it, it's just going to go straight up, and you're not going to be able to go from trough to trough like I was showing you. So that's kind of my explanation of trend lines and a little bit more. I hope you enjoyed it all, and I think that's about it. Have a good day. Good trade.